Hi, I'm attorney Chad Silver. I'm the founder of Silver Tax Group. And before we dive in, I want you to listen to me carefully. If you think you've got an FBAR issue or you're unsure about your foreign reporting obligations, this isn't the time to DIY it. Call me. You schedule a free consultation to discuss your FBAR filings with the firm at silvertaxgroup.com or call us at 855-900-1040. Now, let me tell you something important about us. We build your FBAR defense, we'll submit it, and we'll defend it if necessary. And at Silver Tax Group, all we do is tax. We've been doing it for over 20 years. We're tax nerds and aggressive tax attorneys when it comes to protecting our clients. International reporting, offshore compliance, IRS enforcement defenses. This is what we do every day. It's our world. And what I'm about to share with you could save you from a catastrophic mistake. What if I told you that checking one box on your tax return could legally expose you to a penalty of 50% of your foreign bank accounts per year? This isn't a scare tactic at all. That's like per year. And if you have money overseas, even if you just have like $10,000 across all your accounts, you're going to want to tune in and listen to this video. Today, I'm breaking down the 7 FBAR mistakes that could drain your bank account and how to avoid them. So stay with me. Mistake number 5 is the one that really kills people. Quick refresher, what is an FBAR? FBAR stands for Report of Foreign Bank and Financial Accounts. It's not a tax form. It's filed electronically with an area called FinCEN with the federal government. That's not the IRS at all. You must file if you're a U.S. person, a U.S. citizen, a green card holder, if you got a visa, if you're here doing some type of college work, you're going to have to file an FBAR. The combined value of your foreign accounts exceeds $10,000 at any time during the year, you're going to have an FBAR filing requirement. And the $10,000 rule is where like most people get it wrong. So mistake number 1, thinking $10,000 is per account. The $10,000 threshold applies to like the aggregate of all the accounts added together, not each one individually. So here's a good example. I've got $6,000 in a French account. I've got $5,000 in a German account. Neither account exceeds $10,000, but combined, the accounts are $11,000. Bingo, you got to file. Now, failing to file even non-willfully can trigger penalties of up to $16,536 per account per year. And it's a weird number because it's like adjusted for inflation. So, a very small like understanding can have a huge financial exposure for you. Mistake number 2, ignoring joint accounts and signatory authority. FBAR rules focus on ownership and control, right? Like you can touch it. You can access it on your computer and like joint accounts. So if you jointly own a foreign account, you report the full maximum value, not just your share. Kind of unfair? Yeah. So if there's a joint account with 80 grand in it, you report the full 80 grand. And even if your spouse isn't a U.S. person, you got signatory authority over the account and you're liable for everything inside of it. So if you control the funds, even if the money isn't yours, you may still have to file. Here's other examples. Executives signing on foreign business accounts. Oh yeah, you've got an FBAR filing requirement. Adult children helping manage their parents' account. You do too. Trustees, if you can move the money, you'll likely have a foreign reporting obligation. And this rule catches up people each and every year. Mistake number 3, reporting the year-end balance. The FBAR requires the maximum value during the year, not the December 31st balance, not the end of the year balance, not the average. It's the highest point during the year, even if it just lasted for one single day. If your account briefly hits $50,000 in June, but ended the year at $5,000, you still have to report the $50,000 large figure. So why does it matter? Because foreign bank reports account data directly to the IRS under FATCA agreements. And if your reported number doesn't match what the bank reported, that discrepancy can raise like serious questions. And when a case shifts from non-willful to willful, the penalty exposure increases exponentially. Mistake number 4, thinking FBAR is filed with your tax return. No, 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 it isn't. The FBAR is FinCEN Form 114. It's filed electronically through a separate system. You can file your 1040 totally perfectly and still be totally not in compliance if you forget to file the FBAR. So you've got really two separate duties: to report the worldwide income to the IRS and report your foreign accounts to FinCEN. And missing one or the other means non-compliance and you get screwed. Mistake number 5. This is a big one. I see it all the time. On your Form 1040, there is likely a Schedule B. On the Schedule B, on Part 3, there's questions asking if you have a foreign account and you have a foreign bank account reporting requirement. And this is the most dangerous mistake on this list. On your Schedule B of your tax return, the IRS asks again, did you have a financial interest or signatory authority over a foreign bank account? Yes or no? You choose no when the truthful answer is yes. That checkbox can be used to argue willfulness, and you've signed it under penalty of perjury. So it's hard to say, oh, I didn't know. For 2026, the civil penalty for a willful FBAR violation is the greater of $165,353, or half, 50% of the account balance per violation per year. 2 years of willful violations could wipe out an entire account, and that one checkbox really, really, really matters. So what we do to fix that is we have to amend your tax returns. Mistake number 6, confusing FBAR with FATCA, Form 8938. FBAR and Form 8938 are not the same things. FBAR is filed with FinCEN, 8938 is filed with the IRS. They got different thresholds, there's different definitions, there's different penalty structures, and it's common to have to file both. Again, filing one does not replace the other, like filing your 1040 and failing to file your FBAR. Mistake number 7, quietly filing forward. What does this mean? Okay, this is what people do when they freak out and panic. They realize they've been non-compliant for years, and they just start filing these things correctly going forward, and they haven't cleaned up their backyard. So that is called a quiet disclosure, and it's really, really risky. So the IRS can compare your new FBAR filings with those old prior returns, and where you, like when I was talking before during the Schedule B, where you likely check no, that inconsistency can trigger a review, and instead of solving the issue, you may have just highlighted it. So the right way to fix it, if you made one of these mistakes, doing nothing is dangerous. Trying to quietly fix it can be worse. The IRS has structured compliance programs, including the streamlined filing compliance procedures for taxpayers who are non-willful. And there's 2 programs. There's a streamlined filing for domestic, and there's a streamlined filing for foreigners. That means you're off the grid, or you're outside the United States for more than 330 days. So the programs are designed to help you catch up on FBAR filings, amend returns, pay back interest and taxes, resolve exposure, and they resolve the exposure in a structured, defensible way. But these options are generally available before the IRS contacts you. This is all part of a big strategy, because the IRS contacts you before you've gotten into compliance. That becomes a willful violation, and the stakes become extraordinarily high. So, the timing and strategy and execution, they all matter here. And the final reminder, at Silver Tax Group, we just don't fill out the forms. We put together your FBAR filings properly. We submit them correctly. We build a defensible compliance position, and we're going to defend that position if the IRS challenges it. If you think you may have an FBAR issue, don't handle it alone. Schedule a free consultation at Silver Tax Group or call 855-900-1040. The link and contact information are below. The FBAR compliance is a serious thing, but it's manageable when handled by a successfully smart lawyer and law firm like Silver Tax Group. I hope the video helped you. Don't forget to like the video and subscribe for more guidance on offshore reporting, IRS enforcement, and international tax compliance. Thanks for watching, and protect your assets.